start now. So good evening everyone, fellow students, staff and our guests. My name is Mohammed Junaid Arshad and I am a final year student in University of Hong Kong where I plan to major in electrical engineering and minor in finance. And I would be the moderator for this forum on Islamic finance. This forum is jointly organized by the General Education Unit and the Hong Kong Youth Muslim Students Association. It would last for an 1 hour lecture followed by a 30 minutes Q&A section. Okay, I'm so excited to be here to introduce our guest speaker, Mr. Mufti Taqi Usmani Sahab. Mr. Mufti Taqi Usmani is generally known as one of the leading scholars active in the field of Islamic finance. For more than a decade, he has served as a chairman or member of Sharia supervisory boards of several financial institutions and banks in various parts of the world. He presently serves as the chairman of the International Sharia Council for the Accounting and Auditing Organization for Islamic Financial Institutions AAO IFI in Bahrain and the chairman of the Center for Islamic Economics in Pakistan. Aside from his talents and advocacies, Mufti Usmani is also a prestigious author of more than 60 books in English, Urdu, and Arabic. His better known title on Islamic finance includes An Introduction to Islamic Finance, in which he explains the basic concept underlying the Islamic financial instruments, the practical issues involved in the application of these instruments, and finally he presents some solutions for these problems. On a final note, he is a man of great wisdom and we are truly grateful for his presence among us today. So please join me in welcoming Mr. Mufti Taqi Usmani.
Bismillahirrahmanirrahim. Alhamdulillahi Rabbil Alameen. Wassalatu wassalamu ala Sayyidina Mawlana Muhammadin Khatamin Nabiyyin wa ala alihi wa ashabihi ajma'in wa ala kulli man tabi'ahum bi ihsanin ila yawmiddin. Amma ba'd, my dear brothers and sisters, Assalamu alaikum wa rahmatullahi wa barakatuh. I deem it an honor and privilege for me to be in your midst this evening in order to speak about Islamic finance. And firstly, I apologize that I am talking to you while sitting. Some years back, I did not admit myself to be an old person. But gradually, the old age has compelled me to admit that I am getting old. And therefore, it is easier for me to speak while sitting, for which I apologize before you. As announced, the topic of today's discussion is Islamic finance, and it is indeed a very vast subject, and it is very difficult for me to summarize this vast subject in a single sitting. I have several books on the subject, both in English and in Arabic and also in Urdu. But I'll try my best to give a brief picture of what Islamic finance means. In fact, Islamic finance is a part of Islamic teachings about economic life of man. It is not the whole economic teachings that are covered by the word Islamic finance. Islamic finance is a part of Islamic economics. Unfortunately, the general conception is that economy or finance has nothing to do with religion, or religion has nothing to do with the economic life of man. Economic life is a secular thing, and religion should not interfere with it. But unlike some other religions, Islam has some basic teachings about finance, about economy and finance also. And it is an irony that if you see a US dollar note, you will find a sentence written on the dollar note, "In God we believe." So although the dollar note admits belief in God, yet when it comes to earn the dollars or spend the dollars, God has been treated as out of the picture. And it is said that God is not relevant to how to earn dollars, how to spend dollars. But in fact, God has ordained some basic principles about how to earn, how to spend, how to distribute the wealth or wealth in whatever form it may be. So, in fact, it is God who can determine for human beings how to earn, how to spend, how to distribute. This is the basic Islamic concept. And based on this, the Holy Quran and also the Sunnah of the Holy Prophet Sayyidina Muhammad sallallahu alaihi wasallam has given us a detailed concept of economy. And this is not only an ethical or moral values that are stressed upon, but Islam has given us some basic principles, philosophical principles, on which the Islamic economy or Islamic finance rotates. So, and the other misconception is that Islamic finance is restricted to the Muslims only, because Muslims believe in the Holy Quran, because the Muslims believe in the Sunnah of the Holy Prophet sallallahu alaihi wasallam. Therefore, they are duty bound to obey their commands in their economic practice. But the fact is otherwise. In fact, since these principles are enshrined by the Creator Himself, therefore they are not meant for a particular faith only. So far as the worldly benefits of these principles is concerned, it is not restricted to followers of Islamic beliefs. It is for the benefit of the whole mankind at large. And therefore, Islamic finance is now being applied not only in the Muslim countries, but also in countries, in secular countries. In some countries, there are the majority of the inhabitants are not Muslims. You know that today Islamic finance or Islamic banking is growing with a 15% growth, which is much larger than the growth of conventional banks in today's life. So these are not meant only, these are meant for the betterment of humankind at large. So after understanding this, I would like to give only some basic principles of Islamic finance. The first and foremost principle of Islamic finance is prohibition of riba. Riba is a term that has been used by the Holy Quran, and it means any amount charged over the principal amount of loan is termed as interest or usury or riba in Arabic. So the first and foremost principle is the prohibition of riba. This prohibition has been consistently given by all the divine scriptures. Even in the Bible you will find the prohibition. And this has been taken as something totally prohibited by Allah subhanahu wa ta'ala. But the order of happenings is this, that when the banking institutions have been formed throughout the world, then they was formed on the basis of interest on both liabilities and both asset sides. On liabilities, they accept deposits as loan and pay interest on them. On the asset side, they advance money and then they charge a particular interest over it. So when this practice came into existence and the scriptures stood in their way, then a theory was developed that the usury that has been prohibited by the scriptures was only when poor people took a loan from a rich person and the rich person requires him to pay something more. That is usury and that is prohibited. But in our modern banking system, the borrowers are not poor persons, they are rich people. They take loans or advances to promote their business. They earn a lot of money out of it. And therefore, if they pay something to the banks as interest, this should not be prohibited, should not be taken as something unethical. And this is the theory on which the whole banking system is based today. But in fact, the reality is that the injustice committed by usury in previous days, when the borrowers were poor people, that was much less than the injustice created by the modern banking system. Let me give you an example, a simple, to understand very simply. You know that all the people of the society deposit their money in their banks. No money hoards, no person hoards money or notes in his treasury, but they deposit his money into the bank. The bank advances this money to rich people, to investors, to businessmen. It means that whatever the wealth of the whole society, the wealth of the whole society is given as a loan to a few people who take advantage of that. In my country, the percentage of the people who take loans from the Islamic banks, from normal conventional banks, who take money from them as advances, as loans, the proportion of those people is 0.01% of the whole society. So the wealth of the entire society, the entire country, is availed of by only a few people. These few people make large profits through this ocean of wealth. You can imagine. For example, I am talking about Pakistan, and this is the fact all over the world, that Pakistan has a large number of population. Every person deposits his money in the bank, but he cannot avail of that money. That money goes to large businessmen, and they earn huge profits out of it. So the wealth of the people is availed of only by a few people, for 0.1% of the whole population, and they earn huge profits out of it. And then they, after earning huge profits, they give very tiny amount as interest to the bank, and the bank, after deducting its own profit, gives it to the depositors. The depositors, if you see the rate of interest given to the depositors in most countries, from 2% to 7%. This 2% or 7%, the interest given to the depositors, the poor people who have deposited their money in the bank, when they take it back, they are happy that they have deposited 100 and they are given 107, for example. They are happy with that. But poor people do not know that these 7% that is given to them is taken back by the businessmen, by the producers, because whatever interest they pay to the bank is included in the cost of their production. Whatever they produce, a part of its price is the interest they have paid to the bank. So when this poor person who has earned 7 on his 100, when he goes to the market, he, for example, he purchases bread or butter or tea or anything, then the interest given to him is taken back by the producers from that. And in other words, in a technical words, you can say that the rate of interest given to the depositors sometimes is much less than the rate of inflation. So, in real terms, they are nothing. The whole society, the wealth of the whole society is done only by a few people. This is the injustice. And, then came the role of the paper money, and this paper money then has been transferred into different shapes, and then there came the role of derivatives, in which these people, through speculation, they transact on the basis of speculation in a way that the real money, real notes that are debt-ridden notes, they are not. In fact, they have no value at all. This is the note we have in any country. This does not have any intrinsic value. So this is a paper money, and that have been created through debts, interest-bearing debts. So this notes is also in the present arena. In the present arena, the number of these notes is also so tiny that even in UK, only the supply of money, only 3% of the entire supply of money is notes. The rest of 97% is nothing but figures fed in computers. Nothing else, nothing behind them. These are only created by the proportional reserve system, and they have, if you analyze them, there is nothing behind them. Not only any asset, but not even notes. These are just imaginary money that has the 97% of the total supply of money. Then came derivatives. Derivatives is a strange species that has been created through modern banking system. Derivatives, for example, options, futures, and swaps. These are intended to create speculative transactions on the basis of interest. Option means that you can buy an option to purchase currency or to sell currency, and you have to pay a price for that option. These options, futures, swaps, became now the worth of total derivatives is such that an economist has evaluated it and said that if the worth of these derivatives, which have nothing behind them, the worth of those derivatives is such a large number that if you turn them into dollar notes and put dollar notes one over the other, they can revolve through the sun 28 times. 28 times. The number of derivatives, the worth of derivatives today is much more than the GDP of the entire world. So that has turned the whole economy, entire economy, into a bubble, into a balloon. Normally the word used in economic terms is the bubble economy, but bubble is very, very little thing. I term it as balloon that is being inflated every day, and it can burst any time, and it really, in fact, burst in 2008 in the shape of present financial crisis. So this is the injustice not only to a few people but to the entire mankind. the injustice has been brought by this interest-based system, and it has been in fact recognized. You know, in 2010, the most prestigious economic forum, World Economic Forum, based in Davos in Switzerland, it has devoted a full session on the causes and remedies of the financial crisis of today, and I have been invited to present a paper on the basis of in Islamic perspective. I, alhamdulillah, I wrote a detailed paper on that, which was presented, and also it has been inaugurated in a session through media. So all that was mentioned in that article was really admitted by the giants of the present day economy. But the problem is that the economy is now dominated by some people whose interest in involved. So therefore, they could not be able to bring a notable change in the present system. The basic idea of prohibition of riba is that if you advance money to some people, you must decide whether you are giving him this money on the basis of assistance, that you want to assist him, financially assist him, or you want to share in his profits. If you want to assist him, then you cannot charge anything over and above it, because your intention is to assist him. But if you want that you share in his profits, then you must share in his losses also, because it is the principle of justice that if you share if you participate in a certain enterprise, then you should bear the risk of loss as well as the potential of profit. But if you say that I take only profit and I cannot bear the loss, then this is the injustice which has been prohibited by Islamic Sharia. So now, if the banking system is established on this principle, then whatever people will deposit into the bank will be based on profit and loss sharing, which means that when this money is used, then the profit will be shared by the depositors on equitable basis. And their profit, then if, for example, the bank gives that money to commercial enterprises, then the profit earned by the commercial enterprise will also be shared by the depositors, in which case they will not be given only a particular percentage of 2% to 7%, but they may partially participate in the actual commercial activities, and the profit earned by them will be much more than they are getting today. But it needs a government supervision, because it is mostly apprehended that if the banks advance money to the commercial enterprises on the basis of profit and loss sharing, then there may be a situation that when the enterprise comes back to the banks and says that I have lost money, I have suffered a loss, and therefore the loss will be transferred to the depositors. So in order to control this situation, the state has some rules and regulations and also supervision, so that the chances of fraud, chances of loss may be minimized. So if this is done, the economy is based not only on debts and only on interest based debts, but it is turned into equity. Then every depositor will have equity in the money advanced to the people, to the commercial enterprises. This is the basic idea on which Islamic finance is based. But the other important feature of Islamic finance is that it is always based on real assets. As I told you, in present day economy, real assets is totally out of the picture of the financial institutions. Because the speculative transactions, the interest-based transactions have created a balloon which has nothing behind it. They are too far from real economy. But Islamic finance always is based on assets. Because, for example, if you cannot advance, money is not created to be traded in. Money was created as a medium of exchange. It should play its original role of being a medium of exchange, not to be traded in. Now in currencies, speculative transactions in currencies are undertaken throughout the world. So much so that the exchange of currencies in real terms is required for the cross-border trade only. But the volume of cross-border trade throughout the world is only 7% of the market of currency exchange, which means that most of the transactions of currency exchange are undertaken only for speculative transactions. This volatility in the exchange rate is caused by these speculative transactions. Had it been restricted to only the real trade transactions, volatility will be much less than than it is today. So this is the cause of the inflation. This is cause of the volatility and upheavals in the market. So the Islamic finance says that whatever transaction you undertake must be based on real assets. So you should sell a real commodity. You can also lease a real commodity. You can also participate in a real trade. But this balloon, which is created by speculative transactions based on interest, they have caused devastation throughout the economy, and the people are trying for that. Although the concept was a theoretical concept some 3 decades ago, but in 1970s some Islamic institutions were established as an Islamic financial institution, Islamic banks or Islamic financial institution. They started to work, and they were working in an atmosphere that was totally dominated by interest-based system. But still they tried, and then came one after the other. Many institutions were established, and today, as I told you, the growth rate of Islamic financial institutions is about 15% a year, which is much bigger than the growth rate of conventional financial institutions. So, but the fact remains that they are working in an atmosphere where the uh, conventional financial system is in operation, and they cannot be termed except as a small drop in an ocean. The ocean is conventional financial system, and they are only small drops in that. Therefore, in order to compete, they have been compelled, they are compelled to work in certain limitations, within certain limitations. Therefore, the ideal that I have pointed out, that that participation in profit and loss sharing must be the basis of finance, both on liability side and asset side. This goal has not been achieved so far, and therefore they are working where, although on liability side, deposit side they take deposits on the basis of profit and loss sharing, not you know pre-specified rate of interest. But on asset side, when they advance money to other people, finance trade transactions, they cannot do it on the basis of participation in profit and losses, because the system is such that if they do that without a very competent supervision from the state, the chances are that the persons who take money from them, they can come to say that we have suffered losses, therefore the losses should be transferred to the bank and to the depositors. Also, the people who take advances from the bank, they are open, because conventional banks are there, so they can advance it from the banks on the basis of interest rate which is much less than the expected profit in participation scheme. So therefore, they cannot turn to the Islamic financial institution, because of they cannot sacrifice some of their profits to the Islamic bank. Therefore, the Islamic banks now are working on the basis of murabaha, ijara, and salam istisna, etc. They are trade-related transactions. For example, instead of advancing money to the borrowers, they say that what is the purpose of your for what purpose you want to borrow money from us. For example, if he says that I have to buy such and such bales of cotton, then the bank says that we will purchase the bales of cotton, and then we will sell it to you at a markup, at a profit. So they are mostly working on this. This is not an ideal situation, as I told you earlier, but still it has its own benefits. When the benefit is that the borrowing and advances are always based on real assets. One cannot take money from any Islamic financial institution only as a loan. He must have a transaction based on real assets. For example, banks will sell him a commodity, or he may lease some property to him, but he cannot take money and then is left to do with it whatever he wants. So it is always based on assets. So I admit that this is not an ideal situation, but with its limitations from an ideal perspective, still they are based on real assets, unlike the conventional financial system in which they are not based on real economy. They are just trading in money. They are just trading in balloons, in bubbles, and have nothing behind them. So still, Alhamdulillah, they are based on assets, and that is why when this financial crisis of 2008, overwhelmed the whole economy of the world, the Islamic financial institutions uh, were affected much less than the conventional institutions, because the conventional institutions were based on the interest, on speculation, and on transactions having no real, not related with real economy. Therefore, they were affected much more, and Islamic financial institutions were affected much less than them, although they have been affected, because once a crisis comes into play, then some innocent institutions are also targeted by it. So therefore, they were affected, but they were affected much less than uh, than conventional institutions. And this fact has been admitted throughout the world. Many articles have come to say that the Islamic financial institutions were not affected by the 2008 crisis as affected, as conventional institutions were affected. And it was admitted by a large number of economists, of the experts of finance, and they then turned to know what are the causes that have saved them from the bad effects of this crisis. Once I went to Trinidad, that is a very small country in West Indies. So the president of Trinidad is a professor and also an economist. And so when he came to know about me, he wanted to he requested me to have an interview with him. So I went there, and I was astonished why he is asking me to meet. I am just a student, and then he is the president of a state. So when I went to him and asked, why did you invite me? So he answered that I have been looking throughout the economy, and I felt that many institutions were destroyed totally through this crisis. But the Islamic financial institutions were not affected so much. So I heard that you have some books on Islamic finance, so I wanted to know what are the causes that saved Islamic finance from this crisis. Then I explained to him, and he was very much impressed by the principles enshrined by the Islamic economy, and I told him about the basic principles, and he appreciated all this. But these efforts, or these sermons, as you if you call them, when we give them to a small number of people, they cannot convert the whole economy and they cannot have the power to convert the whole economy. Therefore, the position throughout the world remains the same. But the fact remains that Alhamdulillah, Islamic financial institutions are developing, and their number is increasing. The number of countries adopting Islamic finance is increasing, and even I heard that, mashallah, in Hong Kong also some Islamic bonds have been issued. I don't know the exact nature of the bonds, but I have been told that Islamic bonds have been issued by the Hong Kong, as well as in UK. In UK, Islamic bonds are issued, Islamic sukuk that are called Islamic sukuk. Islamic sukuk were issued by UK, and there is a large number even of conventional financial institutions. They are in the queue to adopt Islamic finance, and because it has been proved so far very successful and very beneficial for the entire mankind, and I hope that this very brief account of Islamic finance was possible only in this time, but I hope that you further study on the subject. There are books after books that are coming on the to explain Islamic finance, and as much you want study, you will be able to grasp at the basic roots on which Islamic finance is based. And thank you very much. For Akhiru Dawana, Alhamdulillah.
Let's take some questions from the audience.
Yeah, thank you for the talk. So the question I had was about Islamic securities and the return on them. So I've seen a lot of Islamic bonds which are benchmarked against the LIBOR, which, as we know, is a pure interest rate. So within the tenets of Islamic finance, are you allowed to benchmark against an interest rate for a return?
Very good question. As I explained in my talk, the ideal situation is that the return on any financial transaction must be based on real profit created by that. But since they are working, the Islamic financial institutions are working in certain limits in an atmosphere dominated by, interest-based system. Therefore, they are using this benchmark for their transactions. But so far as the transaction itself is based on Islamic principles, the mere fact that the pricing is based on a benchmark, does not render it as invalid. So, for example, if a person, is trading in soft drinks, for example, and another person is trading in liquors or alcohol, but the person who is trading in soft drinks wants that I should earn same rate of profit as alcoholic, my brother who is involved in trading in alcohol. So far as he is trading in soft drinks through valid transactions, the mere fact that he has in his mind that I should earn the same rate of profit as the other is earning, this fact does not render his transaction invalid. So, in the same way, if the transactions themselves are compliant with Sharia, so they in fact they are benchmarked on a certain rate, does not render them invalid. Although, as I pointed out earlier, it is not an ideal situation, but it cannot be held as invalid in Sharia.
First of all, thank you for delivering such a beautiful talk on the Islamic finance and highlighting some salient features of the Islamic finance. But generally speaking, Islamic finance tends often to copy conventional finance system. So, but rather than offering a true and genuine, alternative, what practical steps can be taken to change this situation? Thank you.
Thank you. I already mentioned this. I think my talk has covered this point, that we have not yet reached the ideal position of Islamic finance. it requires support from the government, support from regulatory authorities, and therefore the real goal is to convert the existing financial system into equity based, not on debt based. So, but we have not reached that goal so far. But still, the fact remains that the transactions carried out by them are based on real assets, and therefore they are compliant with Sharia in the sense that they cannot carry those effects that have been brought by conventional system. Yes.
Assalamu alaikum.
Bye.
As I heard that you are advisor to Nizam Bank in Pakistan, this is what they tell to everyone. So they issue a Islamic certificate. Suppose, for example, you buy the Islamic certificates for 1 year, and they give you a profit of every month, or you give them an account which is saving account. So will you say this is all according to the
Yeah.
Islamic laws?
Yeah.
So your answer is yes, right?
Yes.
I have 2-3 questions.
Yes, please.
First thing is, as the question that my colleague he asked, if we are getting fixed profit into our saving account, then how does that comply with the Islamic provisions? That
No Islamic institution, financial institution, ensures you a certain fixed profit.
Well, that is.
If a institution does this, it is not Islamic.
Well, I have done a few transactions back in Pakistan with Standard Chartered, the Capital product, and other products as well. And yes, theoretically they do not confirm a definite figure, but practically we know that what the figure is going to be. And I mean, we are talking about the essence, and we are talking about the difference between the theory and the practice as it is done. And I mean, there's like worldwide criticism on that, the practice, that practically it follows the conventional banking spirit. And there is hardly any difference if we talk about like, yes, theoretically they're going to get this much of profit, but practically we know that that's going to be a fixed percentage of the profit that will be getting. Apart from that, I have 2 or 3 other questions. One is, why Islamic finance is so young? Why it's only created during the last 2-3 decades, and it wasn't developed much before that? Islam is like 1400 years before Islam came, and of course these principles were enshrined in Sharia 1400 years ago. But why there wasn't any development throughout those 1400 years? The second question is.
Third item.
The third question is.
Yeah.
Well,
Yeah.
I have a number of questions, but anyways, my question is, their scholars were representing the advisory boards of Sharia advisory boards of different financial institutions. And one particular, or any scholar, they're representing more than 2, 3, 4, 10, and I think up to 30 or 35 different institutions that I have seen.
35?
35 different institutions that one person is representing as advisory board of 30 institutions. Doesn't it create conflict of interest?
Okay.
Yes.
Okay. First of all, when you say that you have seen in Standard Chartered Bank or something, some banks, although they do not give you a fixed rate, theoretically, but you know that you will be getting such rate. First of all, so far as there is no contractual obligation on the bank to give you a fixed rate, the contract is valid so far. The fact that you know is based on the same thing that I have explained earlier, that they, in today's environment, they benchmark their pricing on the basis of a particular rate. And as I said a number of times, that this is not an ideal situation. Still, so far as there is no contractual obligation on the bank to give you a certain rate of profit, this cannot be termed as invalid in Sharia. Your second question was a very important question, that why Islamic finance has come into play only 3 decades ago, while Islam is 1400 years old. When I said that Islamic financial institutions came into existence 3 decades ago, I was referring to this present banking system that through almost 3 centuries, Islam has been restricted to only mosques and modes of worship. It has been totally expelled from political and economic activities of human life, because the Muslims have lost their states, and they were colonized by different people. So therefore, the economic principles and financial principles were not activated through this period on the state level or on the society level. But if you go back 3 centuries back, then you will find that the financial institution, Islamic financial institution, was playing its role. But the fact is that the modern industrialization, it has come after the Industrial Revolution, and the banking system came into existence because of this Industrial Revolution. That was not practiced in before three centuries. But on the large scale, whatever is the basic needs of that society, Islamic financial principles were practiced, the courts were deciding their the judgments, giving judgments on that basis. So what I said, that they came into existence 3 decades ago, it relates only to the banking system, not so in before 3 centuries, the Islamic economic principles were practiced throughout the Muslim world, and its good results were seen by everybody. Your third question was, sorry,
Can I ask a follow-up question on this?
fourth.
No, one follow-up question.
Okay. Okay, no problem.
I don't get any references from the scholarship which relates to any of the contributions or any contribution of Islamic finance 3 centuries ago. So if there is any reference on scholarships, that would be great if you can provide. Secondly, the situation now, the political situation is not changed during the last 3 decades. So I mean, why only now? Because just before 2008 crisis, the national system was a very successful model.
Sorry?
The national system, the national banking system was the model all
Yeah.
over the world. So why now? I mean, there is no big change in the Islamic world, and neither 3 decades before there was any collapse on the conventional banking side. So why it started only 3 decades before?
Perhaps you mean that after the existence of Islamic financial institutions, why its good effects could not be evident in the Muslim countries?
No, I'm asking why only 3 decades? There hasn't been any great political change or economic change within the Muslim world.
Ah.
But why only 3 decades before it started?
Perhaps this was, in fact, during the colonial system, the Muslims were, desperate, and the true spirit of going back to their original principles were very weak. So it is only 3 decades ago that some people dare to come forward to bring this into existence. So it is our fault, no problem. It is our fault that we could not do this before 3 decades. So far as your question that is there any study, the study you will may find in the books of history, Islamic history. You will find there were many many periods in which the welfare society was there. There was everybody could earn. They had equal opportunities for getting profit, etc. You will find them in the books of history. I do not remember a particular book on this subject, but through research we can find it out. So can I turn to your third question? What is that?
That was the conflict of interest arising
Okay.
from.
This is very, the problem is that, Islamic financial institutions mostly depend on the Sharia scholars' views, and unless they approve a certain transaction as being compliant with Sharia, the financial institution cannot work. And you are true that there is a dearth of such Islamic scholars who, on the one hand, they are competent in Sharia law, and on the other hand, they appreciate the financial system, understand the financial system. Therefore, it is true that a large number of sometimes a Sharia scholar has to give advice not only 2, 3, 4, but still more institutions. But these Sharia scholars are devoted to that field only. So therefore, they have no other work. They advise this or that. But it is in fact a question mark on the financial institutions, for which there are some efforts to develop more Sharia scholars familiar with both fields. So it needs training, and training is being carried out in a number of institutions. And now new Sharia scholars are coming out, and inshallah within a certain period we will be able to overcome this problem. So far as conflict in interest is concerned, in fact, Sharia scholars are normally trained in an atmosphere where they have devoted their lives to serve a particular cause. So therefore, if they advise this institution, they cannot convey its secrets to other one. So practically, it has never become a problem that the Sharia scholar has betrayed an institution for the benefit of another. So, but it was a compulsion of a reality that the Sharia scholars were not in such a number that is really required. But now the number is gradually increasing, and this problem may be overcome over time, inshallah.
How Islamic bank they decide to the investor, let's put it this way, that I give them the money, million rupees, and they give me a certain profit end of the year or end of the month. So how they decide that this is the profit for the applicant and this is the profit for the bank? What percentage of profit they take, and what percentage of profit they deliver to the account holder?
This is normally, they have the proportion of profit as divided. This is this is based on market practice. Market practice. For example, in some cases there is the distribution is 60-40. So in some cases it is 70-30. This depends on the market condition.
But they don't tell to the applicant, they don't tell to
Yeah,
the account
yeah.
holder that they don't do that.
No, no.
Nizam Bank don't do it, and Lahore
No.
is a branch in Main Boulevard. So they don't tell you where they invested your money, what was the profit on your account, and this is how we earn the money, and this is what we are going to give it to you.
No,
And one thing, the second thing is the profit of all the Islamic banking and the conventional banking more or less is the same. So how it happened that the profit on the conventional
I have
banking,
to repeat this many times. How much time I should repeat the basic idea that I have already explained. That they are, this is not an ideal situation. I have told, how much times I told this?
right,
Huh? Not twice, thrice, or four times.
right,
But still, it is a fact that the transactions are based on real assets. The transactions are based on real Sharia law. And so far as you saying that in Mizan Bank they do not tell, this is not correct. You know, they tell each month that what proportion of profit will be given to depositors and what proportion of profit will be taken by the bank. This is announced in every branch. It is announced on the website. It is predetermined that the proportion of profit earned by the bank and proportion of profit by the depositors. It is totally declared.
it's very transparent.
Yes, transparent. So sometimes people, the problem is that it is very easy to criticize, but it is very difficult to find a solution. So the people, in fact, the people, whenever a new thing comes into existence, criticism comes from here and there, and mostly the criticism is not based on true information. There are some rumors that have been spread all over, and on the basis of those rumors, the criticism comes. This is not a realistic approach. Realistic approach is that we should evaluate this position in its true perspective. So I have, from the very beginning, I have been telling you that the ideal situation is that the transaction should be based on equity basis and participation in profit and loss. But this could not be done so far. So and there are many causes for that. One of the causes is that I know personally that I emphasize on an Islamic bank to give money on the basis of participation, and I thought because there are many clients who are not not true in their transactions, they sometimes commit frauds. So I sorted out a person who was very pious and was an industrialist. I said to him that you please enter into a musharaka, enter a participant in profit and loss with them, and then I conveyed to the bank. The bank was agreed. But when it came to practice, the bank manager told me that he was very complaining that if we went to the conventional institution, we would have to pay them only 7% or 8% of profit. But now you are saying that your bank will participate in real profits, and then if I pay a portion of real profit, I will have to pay more than 12%. So if I am given a chance to have borrowing on 7%, how can I give you 12%? So this is the mentality. This because of this mentality we are so this needs a support from state, from regulating authorities, so from legal side. So unless this is done on state level, we cannot achieve that particular goal. But it does not mean that because we are not able to come to that ideal goal, we should continue our interest-based transaction as they are. So we should transform to the best possible extent and comply with Sharia to the best possible extent. And therefore, these institutions are met.
I just wanted to ask, what is Islam's stance on the saving certificates issued by the government? Are those justified?
Saving certificates normally are based on interest. Yeah. Please.
So my question is slightly out of the scope of the topic, but can I say that?
Sorry.
My question is slightly out of the scope of the topic, but can I say that?
Out of the scope of.
relevant to the today's topic.
Okay.
Is it permissible for Muslim to work in a bank, like an investment bank? Like it's normally discouraged. I have some family members working in a bank, but what would you say? Like I wanted to have you say on this.
No. Working in a conventional bank.
Like yeah.
Yeah, in an interest-based bank, it is not permitted in Sharia. But if, for example, a person is employed, he should try his best to convert to another. Unless he does this, he should make istighfar with Allah Subhanahu wa Taala, and then he tries his best.
So like in my case, like I have some friends who are applying to these banks. Like we're in final year, so we have to look for jobs. And in Hong Kong, it's a bit easier to get into banks for us international students. So you wouldn't like if you're like
Thank you. For yes,
Just a final question.
yes.
And you've touched upon this, but what is Islamic finance stance on derivatives contracts? So say if I have an interest in the underlying, if I'm an airline operator and I want to enter a forward contract and hedge the price of oil, is that permissible?
Derivatives are not based on any asset item at all. They are just transaction in the air. There is nothing behind them at all. So I cannot imagine a derivative based on a particular asset. So, but so far as hedging is concerned, hedging is a need, a need of a trader. If he has a real transaction of trade, then he sometimes loses because of the volatility of currency. In that case, hedging, in the sense that you make a promise, acquire a promise from a particular person or institution that it will purchase the currency on such and such rate. So this promise, if it is based on a real commercial transaction, not on a speculation model, then it has been allowed as permissible.
Touching on the point on the justice of the legal system, other banks now have become the sole creators of money, and
Sorry?
other banks have now become the sole creators of money.
So?
And the sole creator of money. And with a system based on interest rates, inflation became a constant, and that ensures a constant demand for money. And
Yeah, please, yeah. I could not properly hear you.
Sorry, I'm just saying that touching on a point on the injustice of the present system, you referred to how private banks have now become the only creators of money, and with a system based on interest rates, as you mentioned, inflation rate is a constant, and that ensures a constant demand for their money, and that entrenches the dominant role of banks. Can that be avoided under Islamic finance, and if so, how?
But as I explained, in an ideal Islamic financial institution, in an ideal financial situation, the funds raised from the bank, funds borrowed from the bank, will be taken on the basis of equity, an equitable distribution of profit and loss. Therefore, greater profits may come to the depositors than they are today. But at the moment, you know, since the transactions of Islamic banks are benchmarked, therefore this effect could not come into existence. The only difference is that the transactions are based on assets in Islamic finance, and the transactions in conventional banks are not always based on assets.
I have a follow-up question. Like you said that those are usually interest rates and they're not justified. But how come a country like the Islamic Republic of Pakistan issues? How come they issue these saving certificates?
You know that Islamic, the Pakistan, although is based on Islamic principle, as an Islamic state, and its constitution says that all laws of the country will be in conformity with Sharia, and but this process of transformation has not yet completed. In some spheres, the Islamic principles have been established, and in some spheres, it could not do so. And the abolition of interest is in these spheres in which complete Islamization has not been done so far. But there is a gradual, very gradual process to advance to that goal. And now the number of Islamic transactions is gradually growing as compared to the conventional transactions. Yes.
Thanks for the talk. Just a quick question. What are your views on mortgage loan? For example, living in Hong Kong, do you need to buy a property, to a bank to apply for a mortgage? What are your views?
I had this I answered before. I cannot say what the Quran has said it is prohibited. I cannot say that it is halal or it is permissible. So I would say that. But if someone is compelled to do it, then he should not take it as a permissible act. He should take it as a sinful act. But still, and he feels that I am committing this sinful act, and make istighfar to Allah subhanahu wa ta'ala. That is better than justifying it. Thank you very much for your patient hearing. And,
Now I would like to invite Dr. Wong Chi Chung, Assistant Director of General Education Unit, to provide a souvenir to our guests.
Thanks a lot. Thank you very much. Thanks a lot. Thank you very much.